Hi, it's Lee and welcome to the Tesla Economist. Now, before you get too excited and think I'm about to lay down the path and guide you through some get-rich-quick strategy by trading Tesla, I'll have to curtail your excitement right now and disappoint you. The best strategy for investing or trading is none other than your own. Sure, you can follow someone else who may literally tell you when to buy and sell at the exact time they do, but that really is just gambling. In addition to that, for something like 95% of people who trade stocks, they lose. So be aware of the statistics against you. Therefore, I would suggest that for the majority of you, that it is best to just accumulate stock and hold for as long as you can, accompanied of course by the adage of time in the market beats timing the market. And this was 90% of my strategy. But even so, you might still find some of what I have to say useful or insightful, or at least thought-provoking. And if some of you feel like you need to be a bit more active in the market, rather than simply sitting years on the sideline, then this might be of interest to you too, as this is how I felt. When it comes to LEAPS, I get continually asked by people of when they should buy or when is the best time to sell. Now, I don't try and upsell some LEAPS trading course. I'm guessing I probably could, but I prefer just talking about Tesla. But I am sure you do understand that I can't tell you when to buy and sell shares or options. I mean, that would be insane, and I wouldn't even benefit out of it. I'd just like to talk about ideas I have and what I'm up to, and then get invaluable feedback from all of you. I mean, people hear me out and listen and then comment and tell me their strategies too, or what they think of mine. Although, like I say, I do talk about what I'm up to and do caution everyone whilst I'm doing it. But if you go back to my videos, there's only actually 2 times I've ever said I'm buying LEAPS, which was the crash mid last year and the one this year, which happened to be Tesla's 2 largest crashes over the time since I started this channel. The reason I bought then is because the price got crazy. It was just too good to ignore. It was contrarian investing, buy when low, except I couldn't buy any shares when the price was low, because I had no money. I was truly already in, and my YouTube channel doesn't quite pay me well enough. I use all my income from this channel to cover my financing on my Teslas, and my Patreon supporters cover most of my costs. But I do want to eventually sell my Model 3 to upgrade to a Plaid, so please make sure you subscribe to help me subsidize that. I'm sure it will make me even more bullish and motivate me further to make more videos. I mean, it's the best consumer product in the world. So yeah, I was all in on Tesla, but it dropped to these crazy low prices, and I explained all the reasons they were low at the time, and how they didn't make any sense, and how Tesla was extremely undervalued. I didn't have the funds. So I sold about 10% of my shares and bought up the LEAPS. So I guess that is my strategy in a sense, but it's not like I planned it so much at the time. It just became irresistible, and I managed to sell most of those when the stock was around 10.50 to 11.50 pre-split, and then rebought even more when the stock dropped low in May. And when I rebought, I did manage to buy them with longer expiry dates too. Now looking at mid-2024 instead of 2023, that feels so far away in Tesla time. So much can happen then. I'm just kicking the can up the road as much as possible. The can that has the chance of making it to when the stock hits escape velocity again. They are, however, admittedly a little bit further out of the money too. My thinking is, even if I lose them all and then they expire to zero, then it was just 10% of my portfolio I lost. But if they win, and win big, then it could improve my portfolio by perhaps 30%. 10% won't make much difference to me, but 30% would. That might even be Tesla Roadster money. I felt like this was a calculated asymmetric investment. I tried to do numbers relentlessly to back this up. I publicly show these numbers and go through them with all of you and explain how I reach every single metric. I then read all of your comments to see if there is something I've missed or the reason for my numbers might have been off by something, and then I keep refining them. Bottom line, the return of them winning outweighs the chance of them losing. This is an asymmetric investment for me. For example, I see it as perhaps a 50% chance that I will get a 10x return. That is a good risk to reward ratio. But of course, you could equally look at it as a 50% chance to lose perhaps. But this is my strategy, not yours. You need to come up with your own strategy. We may have different plans, tolerance for risk, capital, security, etc. On top of that, I have been abundantly clear that I only have 10% of my portfolio in LEAPS, or had. It has risen somewhat, but still, the vast majority of my Tesla investment is and always has been shares, and with the very simple basic strategy of holding for as long as I can. But there are also many scenarios out there where we see Tesla reaching 3 to 5 times the current stock price, perhaps within about 2 years' time. And if you manage to catch that with some leaps, then it does feel good. Your strategy shouldn't be something you can work out in 10 minutes or even an hour. Keep thinking about what you want to achieve. What level of risk can you handle? Put yourself in scenarios and be honest with yourself. Think, if in 2 years' time the stock price hits $1,000 and you didn't buy your leaps, are you going to be kicking yourself? You could have a 10 times return perhaps. 10 times return in just 2 years is amazing. However, negative 100% is also not good. So imagine that too. What if you did put money into leaps, and even if in 2 years the stock price still hadn't moved, are you going to hurt? Think about tax as well. You have to factor that in. Then there is the problem when it comes to trading Tesla that I have been struggling with. Well, you know how so many people love to support you when the stock is down and remind you that it's only a loss if you sell. Well, it's also only a profit if you sell too. And being a Tesla bull, that is the hard part, trying to time selling. Now, my initial strategy for leaps was to never sell and just hold and exercise them. But that might have been somewhat naive, given the volatility we see from Tesla. There have been so many ups and downs and opportunities to really succeed. I mean, I always look at Tesla as undervalued. So ever selling seems like I'm selling the stock far too cheap. But the market doesn't see it that way. And at the end of the day, it dictates the price. But I will be selling eventually. I mean, no one ever went broke taking some profits. I won't sell a lot though. For example, if you're up to around 350 to 400, I'll sell off a few, enough to probably cover perhaps my entire initial leaps investment. So I'm just playing with house money after that. It may only be about 20 to 25% of my leaps. Then if it keeps running, I still have a decent amount left. And if it drops, well, rinse and repeat. But it can be hard to hold on to them for that long, for the real run, and not take profits earlier. Of course, I recently increased my leaps holding by 3 due to the split, so it certainly gives me more options. But I hope to hold them long enough until Tesla's stock price does hit around this $1,000 mark. And then I plan on exercising as many as I can afford, likely funded by selling the options I can't afford to exercise, and thus eventually increasing my Tesla position by 30%. Then if Tesla sees big drops again, then I'll give it another shot. Remember though, anything can crop up, including the likes of wars, pandemics, inflation, or some other black swan event. If the stock doesn't rise enough within 2 years, then I likely lose. Unlike shares where you have forever for them to rise and no one can take them off you if they don't. Hence why I don't get too greedy. And this is also the reason I buy the longest expiry dates possible. It reduces risk further. Of course, due to inflation, once the economy corrects itself, the price of everything will likely be higher. Yet I still locked in these low stock prices of today. So leaps could also be viewed as somewhat of a hedge against inflation as well. Although I won't tell you when to buy or sell, you can still ask me questions on Patreon about leaps or investing in Tesla in general. I'm happy to help and love talking about it anyway. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.